Good morning, everyone. Welcome to Admiral Markets. Thanks for joining us. I just want to quickly do a sound check because I'm not sure if you can hear me with the appropriate microphone. But there is a bit of echo, most likely. Apologies for that, but hopefully it'll go away. You got a new place here that has pretty high ceilings and some furniture that's still pending. So I think with the furniture there, it'll get a bit better. But I opened the windows so that maybe the echo is less hearable compared to last week. Alrighty, so let me get this PowerPoint slide going. Somehow it doesn't work. One second. Good, there it is. So once again, welcome to Admiral Markets. My name is Chris. We're going to take a look at the Forex market at technical analysis together and basically look what I am looking at today. Before we start though, before we look at price action and charts, these disclaimers, one of them says that basically this is intended for a global audience, but please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting, conditions, and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange or global financial markets is considered high risk and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only, and by continuing watching this webinar, you agree with the disclaimer mentioned here and also on the admiralmarketsglobal.com website. So thank you for your attention. Thank you for your confirmation as well. For those that did that, great. Today we're going to take a look at price action at pivot points. Now, if you are new, relatively new to these webinars at Admiral Markets with me, please let me know in the chat. I always like to know if we have some people who are joining us for the first, second, or maybe even third time to give maybe a bit more background information on what we do, what I do, and what and why. All right. So, if not, then I know that you've been here longer. We're going to take a look at price action at pivot points. This is, for instance, before you enter the market, you want to be careful with checking whether the market environment matches your strategy. One way of doing that is by using these 5 steps. You always want to know what's the trend at any point in time. You want to know if there is a trend, first of all, but you want to look at the trend and figure out if there is a trend or not, and if yes, which direction. Searching the opportunities could be interesting to trade, maybe take a look at that from a different angle maybe. Checking filters is another step that's important, and then at what point do you really get interested and at what point does one pull the trigger. Last week we had a ton of news. We had euro interest rate that rocked the market because it went lower and the euro dollar fell like a brick. It was a 240 pip bearish daily candle on Thursday where the close was very near the low, a massive bearish candle. And Friday we saw a bit of retracement on NFP, but it wasn't massively retracement, it was just a small retracement. And late yesterday, we saw follow through on the euro dollar to the downside as expected, as one would expect typically after such a massive breakout or bearish momentum continuation candle. Today, what do we have today? We got pound production. Otherwise, Bank of England, the governor speaking, and that's about it. So we got other medium and lighter news, by the way, but not as impactful as probably interest rate. So let's take a look at the markets based on pivot points price action. Now, so what you're going to see here are basically a couple of indicators based on various time frames. On the weekly chart, on all time frames, there will be only 2 moving averages, a 21 and I put a 34 this time on the charts. to see a different perspective of the EMAs. Not 21 and 89, but 21 and 34. 21 and 34 are interesting EMAs to show momentum, power, to show trend, to show angle, support and resistance, even as basically a gravity point, because if there's a range, the moving averages will not be used as support or resistance, but as a gravity point. Price will go back to them. The advantage of 21 and 34 EMA compared to 21 and 89 is that it's easier to measure momentum. When they're about equal to each other, price is moving at approximately a 45-degree angle. Look, here for instance, you see price is moving about this angle, right? You can see the moving averages are quite stable in their relationship to each other. But if the 21 starts getting closer to the 34, price is making a correction. If 21 is speeding away from 34, price is making impulse. So what I like about 21-34 relationship is that ability to to measure basically the lack of momentum where price is correcting, or increase of momentum where price is accelerating away. Those will be the charts. We got also basically fractals in the AO on all charts. The 4-hour chart is showing candlestick or patterns, an indicator showing that. The hourly is showing pivot points. The 30 and the 50-minute chart are showing Camarilla indicator. All right. Just see that. I notice now that I need to quickly change the Camarilla. Patience, please, as I quickly make the font here darker so as to see the Camarilla quicker. Still not visible, hang on. Alrighty, sorry about that. I didn't notice that beforehand. I had it prepared, but I hit some button and there's some here. Good. Alrighty, no, I found it. Alrighty, so let me quickly save this. Sorry about that. I had it all prepared and then found out that this isn't ready. Alright, so that's what we have on the chart. So let's take a look at the analysis now. From the weekly point of view, when you take a look at the euro dollar, we were talking about this downside already for a long time, and all we can add is, or all we can say basically is, yes, the downtrend is continuing. It's just a massive downtrend, massive momentum, and it's accelerating as we thought it would and should at certain spots. Now, obviously, it doesn't mean that it will continue forever, but last week was again a very strong weekly candle, and it's basically in a very bearish momentum. This is probably for those that like waves, it's a wave 3. And even if you don't like waves, it's maybe useful to pay attention now, because at certain spots it makes sense, even more sense than other spots. When price is making correction after correction after correction, it doesn't make much sense, probably, or less sense, let me say it this way. But if price is making an impulse, it's good to note. And you can see, this is probably a wave 3. So it's not rocket science. It's just, okay, this is a wave 3, so this could go far. That's really basically a simple message, but it's really an important message because it prepares a trader for the fact that, this week could be again bearish, and last week was bearish, and the week before was bearish. Otherwise, one might be looking for longs, one might be looking for reversals too soon. And well, as we saw the net positions of retail traders throughout the I don't know about last week necessarily, but the week before and the week before that, I remember that I saw messages about the retail market being that long. So, you know, if you're aware of maybe that, you would maybe be careful with looking for the bounce trade to the upside, especially if you throw in some trend lines and some chart patterns, and you see, you know, as we said already many times, a rising wedge, for instance, here, potentially happening at the top of a contracting triangle, or well, not necessarily top, but close to the top, at a 61.8 fib, then you think, okay, this could be potentially a turning spot, or the 78.6 fib, obviously, too, for that continuation of this momentum. That could happen. Is it the guarantee? No, but it is certainly behaving as such, so at the moment at least. For the moment, we're not sure if that is going to happen, but just being aware of that potential already is of a big help. Okay, sorry about that. So that scenario remains the same. What kind of support levels with 130 out of the way? What kind of support levels are we thinking about? Here is a bottom. Obviously, this is still in place, still something important to be aware of, and something where price could still bounce at 127.50. 126.60, for instance, here is also support level based on this low. A 125 level could be a bouncing spot, obviously, and this trend line, for instance, those could all be bouncing spots and levels that traders, you know, you want to be aware of, because you might not want to go short right in front of those. What could happen is price could stall, price could basically stop at these spots, and we'll have to see how price reacts to these levels. They could be total, you know, total upside after that. We never know. We want to be careful. But if the price does consolidate sideways, more downside is probably likely. If, well, I don't want to make it a wave webinar, but if we quickly look at, for instance, what I'm looking at is, for instance, here on the 4-hour chart, you see wave 1, 2, 3, 4, 5 of 3. And this is making a wave 5 of 5. So 5 waves within 5. So, you know, there are a lot of extensions. This could get extended. Wave 3 could get extended even further. Wave 5 could get extended. So there could be a lot of downside potential if that indeed were to be true, which it does seem so looking at the momentum. So, but we still have to be realistic. We still have to be on guard that the potential pause could happen at these support levels. But eventually I am expecting a break through these levels. I'm expecting a break through the entire bottom here. Eventually I'm expecting a move down to test 120, 118, and even further to 113 and parity eventually maybe. But that's just too soon to tell. Let's see, step by step. The daily chart, though, we obviously had a very strong candle. That's why a likelihood, a continuation of downside was very likely at that point in time. And look at the AO. It's just tremendously strong. This is typical for that third wave. And you can see, look at the 21 being torn away from the 34. Although it's not that visible maybe here, look at the gap between the 21 and 34 here and compare it with here. And it's growing ever since. That's also typical for wave 3 plus the AO supporting it. Not a wave C. This is not looking like an ABC, which was still potentially possible when we were somewhere in here. But after we broke this consolidation with a very minor retracement and follow through to the downside, that did not seem likely anymore, and we're getting a lot of acceleration, especially on Thursday. Let's see, Graham is asking, why would a bouncing spot be relevant from a few years ago? It's basically psychology. It's the market psychology. When price gets to that level, the expectation that enough market participants will be either taking profit or taking some retracement trade to the upside at that spot will probably be high enough to indeed force the market to bounce at that spot. So it's not necessarily the fact that the global events are different now or then, which they are, I'm not saying, but I mean, the fact that it could bounce there has more to do with the fact that the market let's say a majority of the market or enough demand of the market would come into force at that spot at 127.50 at this bottom, because it is a double bottom. It is a level that was well respected, so it could therefore have a good chance of finding respect in this downside. Now, many of these levels we also just push through, right? It depends. 130, we crashed through it because of the news event. 135, we pushed through eventually, but it took some time because we bounced here, right? We bounced here, went sideways for a few weeks. So each level does not have to be respected, could be respected, and we don't know how it will be respected. That's why every time that when price respects a certain level in a certain way, we kind of get more info about what can happen next. And this is how our decision tree is easier to see a bit closer to the future than longer in the future, because each decision spot, we don't know how price is going to react to that decision spot. If we know that price will react impulsively at that spot, that will convey different information than if price goes in a bear or bull flag. So that's why that's difficult. But certain spots, certain areas, we don't expect any support or resistance. We see a trend, and that's where the chances are higher to see follow through. Like here, this big daily candle, looking for shorts. Therefore, upon the break yesterday of the bear flag, made sense, although it didn't go all too far. But still, 80 or 90 pips, which doesn't seem that much compared to this downside, but is already a decent amount of pips, in fact. So enough said about the long term. Let's take a look at 4-hour chart. Let's zoom into the lower time frames here. You can see we had engulfing, for instance, 4-hour twins here. That could be a signal you want to wait for. We have the big daily breakout candle, but maybe some extra confirmation wouldn't hurt. Daily engulfing 4-hour candles, for instance, is such a signal that doesn't hurt. So that was then, yesterday. Hourly chart now. Let's take a look finally at our price action at pivot points. I'm not sure about the basically the candlestick patterns of yesterday anymore on the hourly, but the 4-hour definitely had one. The hourly tried to hit the weekly, but missed it a bit, unfortunately, for the hourly. And otherwise, at this point, you can see all pivot points above us. So, if anything, looks more like a breakout day, than anything, right? If you looking for price action at pivot points, price has to be at the pivot points, obviously. So one of the pivot points we can use is maybe this daily pivot point, which is pretty close by. The target could be, for instance, the daily S3 or the daily S2, which are still above the bigger weekly support level. But in fact, one of the nicest things to look for is when price goes to a pivot point. Let's say price is in a downtrend like here, and it retraces back up to a pivot point and finds rejection. Those are one of the best ones, because then price can continue with its trend, and those potentials for making pips are, there's more space. If price goes all the way to the R1 here, for instance, and then falls to the daily S2, obviously there's more space than taking a breakout trade. So that's the advantage of price action at pivot points, especially if it retraces first. So that's something to keep an eye on. So any move up should encounter retracement, typically. I mean, there is divergence on the hourly chart. That is true now, because the downside obviously didn't have the same thrust as Thursday's fall, which could hardly be almost possible to get the same momentum yesterday as on Thursday. but therefore I wouldn't say the uptrend is over as yet. Sorry, the downtrend, excuse me. I would still look for price action at pivot points. It's still fine, in my opinion. We can take a look at the 50. This is the Camarilla, and we see that the breakout point for the Camarilla is the L3 here at the moment. Any move below the L3 would be the breakout. That's a different, of course, methodology and has nothing to do with price action and pivot points. But for those that have been visiting the other webinars that we have, then you know about this, and that could be potential for downside below the L3. So euro dollar remains bearish basically. 4-hour chart, no divergence at all. So what typically happens is at least 2 bottom breaks here. This is the first bottom break, right? Typically when you get a strong move like that at the green circle, you would see at least 1 obviously, but probably 2 or 3 breaks of that green bottom. All right, before you see some retracement. This is the first bottom break on the 4-hour, so let's see, but typically you would see at least some follow through. We already had 2, in fact, on the hourly chart, although you could see this as a 1 break as well because it's 1 fall. I count it as 1, so I'm expecting at least 1 more break at the bottom. Actually, if not 2. So it remains bearish. It's just how the price is developing throughout the day, and how do we want to tackle and approach that at what spot. Now, same can be said for the weekly on the euro dollar. The weekly is not as bearishly set up as the euro dollar because you can see the fall on the euro dollar has gone further and has lasted longer. Well, I'm not sure if it's further, but it has lasted longer. The moving average is already bearishly aligned on the weekly. The weekly pound dollar still has the 21 above the 34, whereas the euro dollar, the 21 is below the 34, and the gap is widening. So you can see that the downtrend on the euro dollar has been longer in play than the pound dollar. Doesn't mean that the pound dollar doesn't look bearish though. It too broke down below support level here, this channel that was going on the pound dollar here, and broke below that and is falling fast. And every week we're looking at the weekly candle and saying a retracement of that weekly candle for more downside, probably a good potential. And last week the same. Now this week not, because there was a bit of a gap. So price is pretty far from a retracement of last week's candle. And it seems like it's accelerating as well, which typically looks like a wave 3. So everything that was said for the euro dollar could be easily valid for the pound dollar. There's maybe one slight difference, is that the longer structure is a bit more potentially bullish than the euro dollar, but I would say before we get to the 78.6 fib, I wouldn't be all too worried about this fib. So enough space for the moment. And the only thing pound has to reckon with is 160 support level, psychological round number, and this bottom at the moment. Still pretty far from that. So you can zoom into the daily chart here too. You see a very big acceleration. And how can you, it's an easy way to measure it basically. Just count how many pips it's fallen, and if you take this top right in here, 166.50, and it's down to 160.50, that means 600 pips in literally 2, 4, 6, 7, 6.5 days, right? And if you compare the 500, 600 pip fall, but it took about 35 days. Obviously, you can quickly calculate that the last 6 days has been very, very bearish. So here too, we're looking for price action signals of bearishness at pivot points. For instance, price going back to the daily pivot point, and a wick at the daily pivot point, some kind of pin bar, some kind of engulfing twin at the daily or the weekly S1 for downside. That's what we'll be looking for on the pound dollar. Right, it's that simple. A lot of strong AO readings here on the 4-hour and the daily chart. The hourly, there's just a massive momentum. There's no other way to read it but down. Now, it doesn't mean the price could retrace up, but it will be probably very limited in its scope and not expecting too much of a retracement. And I would not trade it because there's too much downside for me to look for retracement. No divergence at all. So there's really not much of an interest for me to do that. Hang on, folks, as I just quickly say that template. 4 hours also bearish, no divergence between all of these time frames. Also, the pound dollar accelerated maybe even more than the euro dollar on the weekly chart, at least. Both are very bearish, and yeah, it's kind of confirming what we've been looking for in this trading room here. So that's pleasant, obviously. Hopefully you got some pips out of that as well. Let's take a look at the 4-hour chart. Here you see the AO very, very strong. Very, very strong. And the AO does not have any 3 bars as yet, 3 green bars. So this downside is potentially still going on. Obviously, at some point, this big, massive downtrend on the hourly and the 4-hour chart is going to stop, and you're going to see some retracement. But looking at the hourly, we don't see any divergence. So one more bottom break does seem likely to me. So from a 50-minute point of view, from hourly, we're looking for price action at pivot points. We need a bit of retracement. If we don't get that, the way to tackle the market then is by trading breakouts, excuse me. Breakouts would be the second way of doing that. Good. Now I finally have the camera that I want. I only want camera. I don't want to make it too complicated here. So basically, either a retracement back, for instance, to H3, or a break below L3. The same like the euro dollar. Euro pound. Let's take a look. Now the euro pound is a bit of a funky currency at the moment. It's showing some headache on the weekly chart in the sense that it is in a downtrend, but price 2, 4, 6 weeks has not been able to break this bottom, and therefore it could have some bullish rebound potential, right? This downtrend lasted long, but one thing it had in common was that almost every week we had a new low and a new lower high, lower low and lower high. Now we haven't had that 6 weeks in a row, so maybe that downtrend is in the fridge at the moment. We got on the weekly chart, we got the AO going back to the 0 line, so maybe that downtrend is temporarily put in the fridge, and we might see some consolidation, or maybe even some more aggressive upside retracement. That still remains to be seen, but I'm cautious on the euro pound because of that. Let's take a look at the Aussie. Now the Aussie remains in that tight consolidation we talked about already for a while. Despite the dollar strength against the yen, against the pound, and against the euro, we don't see it against the Aussie, right? The Aussie staying between these blue lines. On a 4-hour chart, it's basically staying between these trend lines, so it's not a good trending pair. Doesn't mean that price action at pivot points is not useful, though, on the Aussie, all right? because it's a different ball game. We're not looking for breakouts. On the breakouts level, I would ignore odd USD unless it really breaks, obviously breaks maybe out of this entire zone to the downside. That would be different. But for the moment, I would not look for smaller breakouts. But price action pivot points is a bit different. That could lean itself to some potential. Let's take a look. We know that we are pretty close to the bottom of the zone. We're pretty close to the bottom of this orange line. So hence, maybe looking for a bit of a bounce to the upside could be possible. On the audio is the, do we have any pivot points that confirm that? We got a monthly S1 and a daily S1. And price bounced off the L3. So difficult to say. It could be a bouncing spot. It's a bit risky, I think. But this could be kind of like a hook back. I'm not a particular fan of this particular setup. And I will skip it therefore. But there is a okayish chance that price is making kind of an inverted head and shoulders here. But it's maybe a bit pushing it like that. But I would not, I would rather skip it. At the moment, I would probably wait for the hourly chart too, because this is I think a pretty big impulse yesterday. This is a pretty big fall on the odd USD. And in all honesty, that despite the 50-minute chart, the hourly is not looking ready as yet. I would want more confirmation. 3 hours ago, we had the lowest low. This is the third candle after that. What I probably want to see is 5 to 6 candles at least, before even thinking about it. 5 to 6 candles that can't break this particular low. We're now in the third, which means I want to see 2 to 3 more candles, because otherwise this downside momentum could still be actually taking place. So until that, those number of candles are there, I would be cautious with taking any upside rebound. This is the hourly chart. Let's see. This particular one could have been this could have been a bit of a shooting star. I think it was a bit doubtful case. There's a bit of wick, but the candle's so small. Well, the price is reacting to it. It did hit the monthly S1, the weekly S1, excuse me. A shooting star, for instance, here is a great one at the moving averages, right? That happened, I think that was last week somewhere, on Friday. That's just a very interesting clue right there, right? That's an interesting candle. Any bullish candles that are below the moving averages you want to ignore because it's in a downtrend. In this case, because there's good angled moving averages, 2134 showing a decent gap between them here in this space. So you want in this area. So you want to avoid bullish 4-hour candlestick patterns. But shooting stars to the downside, bearish shooting stars in this downtrend is of course interesting. So this one I think was difficult. There is some other pivot point here. I cannot see it, unfortunately. But that looks bearish on the downtrend point of view. But it's moving pretty fast, so the only thing we can do is wait for a breakout of the L3 long at the moment to capture another piece of this action, basically. Another example this week could have been maybe here, maybe Harami here at the weekly pivot point, or engulfing here at the weekly pivot point. That was very early this week. On the 4-hour chart, we see Harami here. That was bearish Harami. That could have been something to look for on the 4-hour chart. From a Camarilla point of view, we would need price to go to H3. This does not seem too likely. It does not seem that likely that price is going to H3 and daily pivot point at this point, but considering the downtrend, it would be good. The other way of looking at it is, for instance, waiting for the break of the L3 right in here, and waiting for a candle close, something like this, a breakout candle to close below the L3. That's another way of doing it, looking at breakout candles instead of looking for rejection wicks at daily pivot points or weekly pivot points like we saw here, or engulfing. Waiting for breakout candles to punch through pivot points. That's another way. If we get an hourly candle that's something like this, for instance, pushing through the L3, that would give us a good idea that this is a good breakout. We'd wait maybe just for a few pips retracement, and a continuation of this candle, hourly candle, is a decent probability. Now the space to the downside is not all too great before you bump into a weekly S2 at 82.10ish. So there's not a ton of space, but there are some pips about, now it's 82.50, so another 40 potentially. Dollar yen is also breaking to the upside, just like the dollar Swissy, and we're seeing a lot of dollar strength happening at the moment. And yeah, anyone who took a breakout in here is a happy camper, because it's just flying and flying up. And you can trail stop. You can move the trail stop loss to below these bottoms to gain more and more profit, but still let the trade open. And that is a beauty of a trail stop loss. Regarding our today's situation regarding the price action at pivot points, it's not an exciting story because price is totally blasted away from them. So we're definitely in a major breakout potential zone. Therefore, it is not a level that seems likely at the moment. But if price does get back to the daily pivot point, it would probably be a decent bouncing spot, because we have a broken monthly top on the dollar yen to reckon with. That is happened right in here, a weekly and monthly top. That was basically the top that entire 2014 the dollar yen could not break above, and now it is doing so. It has spent here about 8 plus months below that top in a very tight consolidation. And now we're seeing finally the breakout. A very exciting breakout because of the fact that we are breaking this trend line too. So finally the breakout to the upside is happening, and that took a while, right? Especially the dollar is pushing this breakout. I see some comments here. Let me see. The very last comment is Claudio asking about divergence on the weekly. Yeah, there is divergence. In fact, I think that's why one of the reasons we saw this taking so long. I think that this and these upsides were basically yen weakness upsides. I think this is a dollar strength upside. That's why we're not seeing really much of follow through, as much at least, on other yen pairs. This is more of a dollar yen breakout. So that, I think, explains part of that divergence. There was divergence. Obviously, I did expect this upside to go further than it did. It kind of stopped earlier than I expected, and we got this consolidation. That's why we got the divergence. But one divergence doesn't always have to lead to reversal, and even on a weekly chart. So we did have a massive consolidation, which moved price back to the moving averages, basically, and then anything can happen again. So after that, it could reverse or break. So both were possible. With the dollar strength, obviously, the upside did happen, but it has nothing, I don't think, much to do with the yen weakness, more with the dollar strength that's happening against the Kiwi, pound, and euro, and only the Aussie seems to be holding up pretty strongly at the moment. That's the only one, roughly speaking, of course, because the Aussie has fallen yesterday, but prior to that, it's been keeping its head up. So that would just explain that, in my opinion. If we look at the targets here, because we've had more upsides already since then. We had here a wave, we had here move up, and here move up. So what could explain such a thing? Well, this could be an extended wave 5, for instance. If we look at the wave 3, which is probably this was very, very strong. What is the target of that? It's all the way at 111, maybe even all the way up to 120. So there's pretty good potential there. And this is building momentum. And I remember here saying this second go through is probably going to have more chance than this first go through here at the blue circle. So it's pretty neat to see this power of the dollar yen indeed unfold. We had a strong daily candle close above the 105.44-ish resistance top. Look at that candle closed above it. Look at that candle closed near the high. That's not a false breakout. That's a sustainable breakout. And in that regard, taking a long just based on that candle right there, although the stop loss would have to be all the way below 105 at 104. Below 105, 104.90, 390-ish. That's the bottom of this week's weekly candle. So, that would have to be the entry there, about 100 pip stop loss. The other potential was putting a potential pending order at 105.50, but price so far is not hooking back to 105.50. That is obviously the broken resistance. But it looks like price is accelerating away from it for the moment. AO is growing on the 4-hour chart. So, yeah, from a price action point of view, would like to see price back to the weekly R1 daily pivot point, but whether it will get there is the question. It looks more like it's in a breakout mode today. Obviously, when I'm choosing these topics, I don't know exactly which strategy will be better, but today looks more like a breakout day than a price action and pivot point day. But you see, these bearish price action signals are meaningless when the moving averages are this bullish, in my opinion, unless you have very good supportive evidence. Now in this case, there could have been some evidence for that because we were in close to a monthly top. So I wouldn't say that this wouldn't make sense at all, but I avoided any shorts in here just because of the fact that I expected a breakout based on other things. But anyhow, there was engulfing to the upside. There was engulfing here and engulfing here. Those could have been clues for upside on the 4-hour chart. The pound yen is finding some upside yesterday, not as aggressive as the dollar yen, obviously, because if you look at where price is compared to most recently, it's actually quite low compared to previous points of price. So obviously it's not the same as the dollar yen, as we can see. It has everything to do with the fact that the pound dollar obviously is falling. The other yen pair that is not doing all too bad is maybe the New Zealand yen, by the way. That's the only one that has some potential, maybe because of the fact that it broke a ascending wedge here, right here. This is the top line. This is the bottom line. Breaking that ascending wedge to the upside. Not as great as the dollar yen, but it could be a breakout to the upside. Let's see, I got some questions. Marcio is saying, I checked direction on daily one and entries on 4-hour using daily pivot point. What pivot point period would you recommend? Let's see, I checked direction on daily one. That's great. This is very, very good how you do that to split analysis and trend and the entries on 4-hour. That sounds very good. The pivot points period is, I don't know, I think it's I don't have anything specific for that. In fact, it's just I use a pivot point indicator that uses these kind of elements. There's not a specific, if you use a pivot point indicator, then, oh, that's what you mean. Okay, I was already confused. But I use daily, weekly, no problem. I don't know what you mean. No, I use all three of them, in fact. Although I think the weekly is great for 4-hour signals. The daily is better, I think, 4-hourly and 30-minute. And the daily could be good in combination with the monthly, for instance. Sometimes. Although I think the weekly and the daily are probably more valuable. But I do have them on the chart. Let's see. Björn is in it on a weekly time. Weekly trade, how far should I aim? I think Björn, that comment was a while ago, 8 minutes ago. I think, were we talking about the pound dollar at the time? Or was it the dollar yen? Dollar yen, okay. So the New Zealand yen could be breaking, I'll go to the dollar yen now. The New Zealand yen could be breaking to the upside here. It's not going to be probably as strong, but the Kiwi dollar could make some retracement to the upside as well. So, you know, with the dollar yen breaking to the upside, all yen pairs do have some potential maybe to keep an eye on for upside, but we got to be very careful. I mean, I wouldn't trade pound yen to the upside, for instance, or euro yen to the upside at the moment, at least. The Kiwi yen, because the Kiwi is maybe doing decently against the yen as well with the breakout here, could be something to think about. Dollar yen target, I mean, from a bigger point of view, 111 is the target, but from a daily point of view, there are some targets probably in between that. One of them you want to be aware of is by putting a fib from here to here. And you see 107.85 is the minus 272 target, and 110.92 is the minus 618 target. That minus 618 target, by the way, is the minus 272 of this weekly chart right here. And you see that that minus 272 of the monthly chart here, or weekly, at 110.90 adds up exactly to the minus 618 at 110.92 of this smaller fib. So 110.90 is the main target for the moment. 107.85 I would say is the target in between. Of course, we'll have targets even in between that when you go to lower time frames. But Björn was looking for a weekly chart, so that would be my answer then. If you're looking for weekly targets, then I would say 107.80 and 110.90. But another way of keeping an eye on intermediate targets is just by going down to the 4-hour chart and then putting fibs on these swing highs and swing lows and keeping an eye on those targets. Alrighty, let's see. Euro odd, let's take a look at the euro odd and then the pound odd, okay? And then it's up to you, I guess. If you have any preference, let me know. The euro odd is looking bearish too. Another bearish weekly candle. That weekly candle breaking through the resistance, the support here, accelerating in its downtrend, moving pretty fast on the euro odd, catching up a lot of this upside, moving down, down, down. So this upside, although we have kind of like engulfing daily twins, there's too much bearishness, too strong of a bearishness, I think, to see a big retracement. So all what I would expect is price maybe to move up to this blue point, not more. We are actually at a weekly pivot point. That could be already a dropping point as we speak. This is a pretty interesting spot to look for potential shorts. When price hits H3 again, double top for instance, or even right in here, or at the daily R1, or all three. But roughly here, stop loss, price can retrace higher if you really want to be safe, or safer. Price should be at this blue line. Let me make that red. Or magenta. It should be a magenta. If you want to use a more aggressive stop loss, it could be above the daily R1, but that has certainly its risks. But this could be a shorting zone as is. Now, obviously on the hourly chart, it did make a pretty good rush up. So there's always the chance that there's one more retracement up to -272, up to the -618 target, and then we move down. Something like that could happen easily, something like this. Because this looks like impulse, correction, impulse, and then we move down after we hit that resistance to continue with the bigger trend. That's why a stop loss above that top right in here is safer in my opinion. That is the reason. But from a price action point of view, at pivot points, this seems to be the best one for today. This seems to be the one that has what we're looking for because it is close by. All right, so maybe still a few more pips up. If you're patient enough, you know, one could wait a few more pips, 20 pips. It's kind of hanging in the middle of nowhere now. But yeah, that depends. Obviously, it's a pretty big stop loss if a short is taken with stop loss all the way above this top. That might be a factor that not everyone feels comfortable with because it's a really, really, really big stop loss. Just because of the massive size of this downside, you know, stop loss size is pretty high here. So one might therefore try a more tighter one. It could be a reason, but there's that chance that price, you know, makes a bigger correction because this is a pretty big impulse too. So in that regard, maybe waiting for the breakout could be a bit better because if we get a breakout, then that retracement up probably is not going to happen anymore. It's like a wedge. Pound odd. Strong, strong trend too, just like the Euro odd 4-hour chart. Here the Euro odd is pretty close to the 4-hour AO. Once it gets back to the zero line, it's a perfect shape for downside. Look how strong this AO fall is compared to the previous ones. The Euro dollar, pound dollar, just like the Euro odd and pound odd, are prime examples of very interesting shorting potentials here. Euro odd specifically, if it breaks below the daily pivot point, I would say, breaks below this triangle, could be a great breakout trade. If someone took this weekly pivot point, you're not doing too bad either. The same stuff could be valid, is valid for the pound odd too. Tremendously strong AOs waiting for downside. The question is when and where. AO on the hourly is already back to the zero line. So I don't know. I would personally not look for an upside break. If anything, any shoot up, I would still be cautious of let's see, these tops right in here. That should be a resistance zone for more downside. Max the weekly pivot point, I would expect, and then we could expect a drop again. So it all depends how aggressive this pound is retracing. It is moving a bit up at the moment, so you see that pound is generally following suit. Pound CAD maybe 2, pound CAD 2. Pound, most pairs big gap, but seeing a bit of retracement on all of them. So Euro odd probably looking slightly bit better, but that could change quickly. So I'll keep an eye on both of them. Now the pound though is something we want to be aware of because of the fact that we do have manufacturing, production, and Bank of England governor speaking. So you might just want to avoid the pound. Therefore, maybe the euro odd indeed the best for downside break. Below the L3, an aggressive short below the triangle potentially, right here, or waiting for the break of the daily pivot point. Overall, though, pound CAD here too, strong AO, big difference between the moving averages, very bearish. Question is when and where the break will happen and how far the retracement will go to hunt for shorts, basically. Any spot where we get price action wicks at the daily R1, daily R2, the weekly pivot point on hourly or 4-hour are, in my opinion, decent shorting potentials for downside. So, yeah, today's summary is pretty straightforward. In fact, I think looking for euro odd and euro dollar downside. Pound odd, pound dollar downside after the news events, looking for dollar strength in general. We actually had a Harami already, so this might be potentially shorting's moment right here. Now the only disadvantage is that the AO is retracing back to the zero line. So let's take a look at the hourly. Slight divergence between these bottoms. Yeah, this could probably best might be even to tackle it with multiple frames in a way, like maybe a smaller short here, but with a wider stop loss above, for instance, the weekly pivot point. But that's a big stop loss, so some traders might not like that. Or if you don't like that, you could one could wait potentially for that spike up, then look for an entry, a rejection wick with a tighter stop loss. The problem what I have with trading the Harami here is the fact that there's still a bit of a gap above it, and we had a strong momentum here. So I'm not particularly a fan of using this top as a stop loss placement at the moment. Unless it gets rejected again, unless it makes a double top and gets rejected again and breaks maybe below the daily pivot point, then I wouldn't mind using this level as a stop loss. For the moment, it seems to be a risky point to put the stop loss there. The odd CAD, for instance, I just bumped into it. It's not, there's a particular reason I'm looking at the odd CAD, but pretty choppy. The odd and the CAD more recently quite in balance, maybe for the last few years, in fact, if you look at it from this perspective. So there doesn't seem to be a great trade at the moment. I mean, maybe, for instance, these wicks here at the bottom and top, a shooting star here, and a Harami here at the bottom, and golfing at the top, those could be interesting. Patterns maybe, halfway this zone are definitely less interesting. New Zealand retraced down to the downside yesterday, but overall in an uptrend, as we can see here. accelerating on the daily chart. So some retracement trade yesterday, but nothing more maybe than that. A break above the daily or weekly pivot point could be very interesting for upside break. This is also how you can use those pivot points. So 15-minute chart, I would say indeed a break above H3 could be good for upside momentum continuation. We would be breaking out of this, basically this channel to the downside here on the AUD New Zealand. So breakup potential here on the AUD New Zealand, looking nice right there up to H5. So if the AUD New Zealand could be breaking to the upside, maybe the AUD Yen is interesting. Let's take a look. There it is. Yeah, the AUD Yen is looking maybe even better than the New Zealand Yen, in fact. Broke out of this uptrend channel like that. Pretty good impulse here, even better than the New Zealand Yen. These negative bearish candlestick patterns, bearish ones, don't look at them when the moving averages are like this, but the bullish ones are okay. And yeah, it looks like we're in a triangle, and looks like we're potentially breaking out of that triangle. So that looks like a potential bullish one. We got engulfing twins right here at the daily pivot point. So that looks pretty good to go for a potential bounce / break. On the AUD Yen, a bit choppy price action the last 2 days, but looking at the 4-hour, it looks more like a consolidation within a pretty decent uptrend here. Strong weekly candle, so it has its risks to go relatively close to a weekly high, but in this case, with the consolidation of the 4-hour chart, it looks more like a pause for more upside. So breakout here looks interesting. The H5 is 98.90. That's the same as the daily R2, roughly speaking. So that seems like a conservative target, I would say, in my opinion, because it's only about 40 pips away from here. A more aggressive target, let's take a look. $99.15 is the minus 618 target when fibbing like this. But let me zoom into the hourly chart and see what the AO says when looking at the AO. Let's put a fib from roughly here to the top. That says 99.19. So yeah, roughly 98.90 and 99.15-ish for the moment. Looking at the targets of this AUD Yen. From a price action at pivot point of view, this was an excellent engulfing twin here at the weekly pivot point, as we can see. That's a good example. This one I didn't take, but it is a nice example. Engulfing twins also within an uptrend, also relatively close to these tops and these bottoms, for instance, as extra support. So that's an example of what one could think about when looking at price action at pivot points. Is there any questions besides the ones I already have seen? Anything else that piques the curiosity maybe? Yeah, I basically have the wave analysis in my show with Admiral Markets, and that normally is released earlier, actually, but it's been lately a bit later. That's not typical, actually. It should be there earlier, but hopefully they'll get earlier and earlier. And let's see. So let me show you what it is. One second. Let's see. Admiral Markets website. And analytics wave analysis. But if you send me an email, I can send you more info on other things. So I just have here my email address, or write down your email address and I can send an email to you. But this is easier for me, otherwise it's easier for me to keep track. Judy, what will be the stop loss on the odd yen long? We can take a look at that. And Mike, what do you think? Do you think that euro would trace to 129.14 pivot? Alrighty, so can you briefly repeat the euro-dollar analysis? Surely. Let's take a look at that. Let's see. Odd yen long. Stop loss. Yeah, there are various ways. One could take a long right in here. Obviously, we don't know if this breakout is going to be a good breakout or a false breakout. That's one of the advantages of waiting for a good hourly bar to push through it and then waiting for a bit of retracement of that hourly bar. That would be a second entry method. In any case, the stop loss, I would say there are more or less two options. One could be below these 4-hour candles right here, or if one wants to be a bit more safer, below the 4-hour fractal, which is about 98.03-ish or 97.97. The more aggressive one is 98.23-ish, 25. Now that aggressive stop losses may be a bit on the early side, because when you see 4-hour charts with engulfing twins like this, then when this 4-hour candle closes, basically, it could be probably more appropriate to do that. This 4-hour candle is not closed as yet, so we don't know if it's engulfing. If it closes, for instance, a couple of hours from now and it turns into a massive wick, the stop loss at the more aggressive place is in danger. So waiting for the 4-hour candle to close before using the more aggressive stop loss, I think, is probably wise. Basically, if you look at it from a daily point of view, the stop loss placement, either the conservative one is using yesterday's low, today's stop, the more aggressive stop loss is using today's initial low. That's a bit of the difference there. So that's why one is more conservative and one is more aggressive. And we can see that difference on not only the daily but also on the 4-hour chart then. And the hourly, where we're basically on the hourly using the most immediate bottom or 2 bottoms away. And 2 bottoms away is typically more safer. But it all depends on how this breakout. If one wants to be a bit more patient, it could be good to look at how this breakout happens. Breakouts sometimes take 2-3 times before they happen. And you might want to keep an eye on the H3 as well, if price pushes through that level. Preferably, we'd like to see price stopping at H3 and then breaking it through it again. So something like this, for instance. Now the other option is to scale in either a small part here and then a second part upon the break of H3. thereby splitting the risk in two parts. It's difficult to tell. Let's take a look at the dollar yen for more clues. Obviously, the dollar yen is going to be important for this Aussie yen as well to continue. Four-hour not showing any signs of weakness as yet, but the hourly could be. 3 minutes left for that. So I would probably use the more conservative one for the moment, unless we get good 4-hour continuation signal. Let's see, the euro dollar, basically like the pound dollar and dollar yen, looking very bearish. As I said Thursday, this massive bearish candle that is the biggest bearish candle of all of these bearish candles within this entire downtrend. This is the biggest one, therefore a massive impulse, a massive momentum signal of more downside to come. At least 1, 2, maybe 3, 4 bottom breaks we can expect. One already happened. I'm expecting more because of the massive momentum on the AO. Bearishness all over the place, bearish confirmation after we had a consolidation in here of a very strong wave 3 potential. And it doesn't look like we've reached any potential level that I consider strong enough to stop that. Unless we reach 127.50, that could be the first spot to be careful of. So for me, downside, for me, price getting a short here was good, and we hit and went down. We moved and broke out and went down. So bearishness on all these pairs. Just the question is when and where and how. Whether it can go to the daily pivot point, I think was also a question somewhere, but I missed it. Is the question. There's a decent chance we might not even do that. So keep an eye on both the retracement or the breakout. Makes sense. I wouldn't go personally short probably in here because of the fact that well, it's pretty close actually. It is almost breaking out as we speak, in fact. But to be very precise, probably would rather wait for a break of this bottom. Break of the bottoms is never a pleasant place to go short, so instead of going short right there, waiting for the break to happen with an hourly candle, for instance. Although this is a pretty strong engulfing twin, so I have to admit that the chances of a bottom break are pretty decent, and the chance we'll get up higher is not so decent anymore. So with that said, the difference between waiting for the next candle probably would be not that much. A short right in here is 74, 76. And the next hour, if a trader waits for the next hour to short, it might be 10 pips worse, but you have a confirmation of this bottom break. So that's always a bit difficult of a choice. It depends on each trader how they view it. I mean, the trend is obviously down. It's just about the parameters of when and where, and that sometimes is very tricky depending on the situation. I think the euro dollar is a good breakout. Obviously, there's always a risk involved that the breakout can become false or not get followed through. But with the euro dollar, at first, I wouldn't be too worried about it. I mean, even if it does turn out into false break, it's, I think, still, in my opinion, worth the potential. And we're pushing through as we speak. So it looks like we're making the breakout right now. So if someone took it earlier, you got a few pips extra. If not, I don't think it's really a big problem. The breakout could be right in here, or let this hourly candle finish and wait for a bit of retracement of this hourly candle. Both options are possible. But a stop loss, let's take a look at stop loss. I would still probably put above the daily pivot point. I think that makes sense, but it's a bit wide. Maybe it's 50 pips. It's on the wider side of things. If one uses these tops, 129.03, it's a bit more aggressive, but would be understandable. 129.03 or 128.97. From a five-minute point of view, we didn't dive into that. Looking pretty aggressive. So those are the options, either waiting for, either taking the breakout here or just waiting for this hourly candle to finish, and then taking it maybe with a few pips retracement, for instance. If this is how the hourly candle would finish, taking it at the magenta line there, for instance, or roughly about halfway that candle, maybe just slightly below halfway, would be a way to get into a short. So we'll have to see. I mean, obviously, I have no idea if the trade is going to work out, but considering the downtrend momentum, it doesn't look too bad. Actually, I took a short yesterday, and I actually exited that trade around 70, 128.70 here before this retracement, and but that looks like not the end of that downside as we can see, because we're getting some follow through. So I do think that there's pretty good potential, and I'm not too worried about a bigger bounce until we really reach 128, 127, 75, 127.50. Yeah, the euro could react a bit to that pound news as well. It's not gonna. I mean, typically wouldn't react, as far as I have seen. Doesn't react as strongly as the pound does. I mean, the euro could be really literally go pretty flat, in fact, and the pound could be jumping all over the places. I mean, there could be some follow through with the pound, depending on its direction against the dollar. But more often than not, if the pound is moving against the dollar, you'll see the pound move against the euro as well. And the euro pound could be being moved as well. So, and the euro dollar will kind of go flattish at that time. But if you prefer to wait for the pound news, obviously there's nothing wrong with it. I mean, there's nothing wrong with waiting for that. It's just that I personally, my plan, don't exclude the euro dollar if there's a pound news. But if you have that in your plan, there's, I mean, nothing wrong with waiting a bit more for the news and then just taking out a position. In most cases, unless of course the pair has gone way further, then obviously sometimes the trader is unlucky, but you know that's part of the risk obviously. Yeah, got you, Bern. Yeah, that it's it's one or the other, isn't it? Either waiting too much or waiting too long sometimes. Sorry, not enough or too long. Well, folks, let's take a look at how these pairs behave tomorrow. I hope that you'll join us then. We got webinar tomorrow looking at Forex strategy. In the evening, Nana's going to take a look at scammers. Thursday, we got moving average. And Thursday evening, learning classical technical analysis. And Sunday, by the way, special premium webinar for account holders only. So hope to see you one of these webinars. Wish you all good trading, lots of success with the trading, and also a great day. See you soon. Cheers.